Today, we will discuss the market pulse, emerging versus developed markets, dollar trends, and election impact. Hello, everyone. This is Shilpa Raidas, and welcome to Midweek with Indiacharts. And we have the senior analyst with Indiacharts and Strike, Jay Vora, with us. How are you doing, Jay?
I'm fine. How are you?
I'm doing very good, Jay. Thank you so much. And very excited to hear your analysis this midweek, Jay. So starting off with the first query that I have with you, how are the equity markets across the emerging and developed markets doing right now? And where are we seeing the big action happening? Also, can you please tell us what's your take on the dollar index, gold and silver, Jay?
So equity markets more or less are okay. I mean, we haven't seen very big moves in the past 1 week, but it is slowly grinding higher, and that's about it. But overall mood seems to be bullish. I think the bigger action is actually happening in commodities where, gold, silver, gold, silver, copper, zinc, aluminum, these all commodities have rallied and they have seen some major breakouts as well. So I think that's where the major activity is happening. Wait, let me share my screen. So first, yes, I mean, when we look at the US indices, as you can see over here, they have been inching higher steadily. So no concerns over there. I think even if we look at the emerging markets also, they are more or less okay. So, I mean, broadly, if we see any index, be it developed market or be it emerging markets, across we are seeing these patterns only. That is, the 20-week is being held and they have been steadily inching higher. Now, I want to take some time and discuss today the setup of gold and silver. That is because, we have seen some major breakout. I think gold we had discussed in length earlier as well, where this entire 10-year cup and handle pattern, that was broken out, and after that gold has been steadily inching higher. So from a medium to long term perspective, say from 1 year to even 3 year kind of perspective, gold looks very attractive. I think we have discussed about it in length. The chart of silver, I don't think many might know this, but I think few weeks back we had highlighted that, from this triangular consolidation, silver seems to be breaking out. Wait, let me hide my drawings. Yes. So if we see over here, this was the triangular consolidation from which silver broke out. Okay. After that, there was a pullback as well. And now again, it is inching higher. Okay. So this broadly is a very good setup. What earlier we were looking out for was a break above 30 level, which was this. Okay. So this was, I think, 2021 high. Silver was somewhat struggling and it was not breaking above that high. But now that we have silver breaking above this high, obviously we'll need to see the monthly closing as well. How does it go about? But when we look at the setup on any time frame, you pick it the monthly time frame. So over here as well, it took support of the averages and now it is starting to take off. In fact, even if we see the quarterly chart, which is the 3-monthly chart, you will see a similar pattern. There was an up move, there was this consolidation, and now it seems to be breaking out. Yeah. Now, one fact which if people would see this, then they will be probably shocked. And that is, when we look at the chart of silver, so what you can see is a big cup and handle pattern that seems to be forming. Okay. And, the fun fact is that this actually high, which we had seen on silver, that was of $50, that was in 1980. Okay. After that, this high got revisited in 2011. Okay. And it is only now that, the setup is there basically once again to test this 50 level. But it cannot keep again and again, resisting at 50 levels. So at some point of time, this level will break on the upside. Okay. And remember, in technicals, those who know technicals obviously would know this, but those who don't know, the higher the consolidation or the bigger the consolidation, okay,
Okay.
the major move can occur in that
Okay.
particular commodity. For example, I mean, just let me share with you the setup of 2008. So over here, actually, in gold had made a high of somewhere around $875 in 1980. After that, we had seen almost a 20-year kind of correction or a bear market. And then what we saw was, gold almost becoming 10x from the bottom. Then after there was a correction, and now again it is probably starting its next leg on the up move. So usually you will end up seeing multi-year kind of up move. Okay. So this, like I told you, I mean, it was only somewhere around in 2005 or 6 where this major hurdle was crossed on the upside, and then we saw a big move. Something very similar is happening in silver. So this is like a mini breakout that we have now. Now a major breakout will be once the silver crosses 50 mark. Okay, that's where I think a big upside target will come into play. Now this everything means that there will be probably a big move in the commodity index as well. I always struggle to find Bloomberg Commodity Index. Yes. So if I have to. So over here as well, you can see that the Bloomberg Commodity Index. So this accounts to all the commodities. Okay. Over here as well, we can see that there was a good 50 or a 61.8% retracement. So it was 50% retracement. And if we do the monthly, chart, so basically, this was 1, 2, 3, 4, and 5. And after this, we saw a correction which was back to wave 4. Okay. Which retraced somewhere around 50%. And now we are seeing a monthly crossover in the Bloomberg Commodity Index as well. So even this is sort of confirming that, we can probably see the next leg of up move. Now the thing is that, few commodities are sort of confirming that, like when we saw gold, I mean, that is breaking out from this multi-year consolidation. When we see silver, it has broken out from this consolidation. Now, 2021 high is also broken on the upside. Probably, I think we should now see, silver eventually heading towards the $50 mark. And once that is surpassed, I think that is where a big breakout can occur in silver. In fact, if you see copper, that also now seems to be breaking out from this range. So over here as well, the previous high was $5.03. In fact, during this month, we had briefly broken about it, but it is now somewhat faltering. But when we look at the overall wave count as well, okay, I mean, this was the previous wave count that I had marked, but now that we have all the levels broken on the upside. So actually what is happening is that this is wave 1, this is wave 2. Now within wave 3, okay, this is 1, 2, and this entire thing is 3, because within 3 we have 1, 2, 3, 4, 5 that is unfolding. So over here, what may happen is that there will be a wave 4 correction, and then once again it will inch higher. So ultimately, I think over here as well, this entire sideways range that we have seen for the last many years, eventually I think that will also break on the upside, and that may end up triggering a big rally. It's only actually crude oil, which seems to be it has gone sideways and it is literally doing nothing. Now I'm wondering like how to consider crude. It could be that it is forming possibly a base triangle over here. But even when we see crude, again, it has done that, that it has come back towards its previous low. So over here also what we need to see is whether we see a pickup or no. But broadly, if we see any of the commodity basket, they seem to be doing very well. Like I told you, aluminum. If you see over here, aluminum has, seen almost a rally from $2,200 to $2,700. If we see zinc, that has seen a runaway rally in the past few months. Even if we see, I think, lead and everything. So almost everywhere we are seeing this same story happening. And I think this sort of suggests that there is a broad-based rally that is happening in commodities. Now, what we need is actually a confirmation from dollar. So from the past week that we had a word. So over here, what has happened is that at the 20-week average, dollar is so far taking some sort of support. We have already seen RMI, giving a bearish crossover. Now, what we would want to see is a close below this low. That is, I think, 104.08. I think once that happens, the ingredients are in place that it end up seeing next leg of down move. In which case, it will probably go below 100, and that may, I think, further fuel the rally in commodities. So that is what we are working with right now, that eventually the dollar index will break on the downside. And even in silver, even if we see the daily chart, so what has happened is that, there is this runaway rally that we have seen. So there will be some bit of consolidation that we'll see, and then again, it will inch higher. Even if we see gold, we are sort of seeing that there was an up move, there was this consolidation, and now again, it seems to be rising higher. So in past couple of days, there has been some sideways sort of action. But, broadly, I think it should be inching higher. And in the days and the weeks to come, it should be headed a lot higher from even from the current levels. So in all these cases, I would guess that now the daily averages will not break on the downside. So,
Okay.
if we end up seeing any meaningful decline or a correction, probably daily averages will work as a very strong support on the downside. And eventually, it should be headed higher. So yes, that's what we are expecting. The only thing that we now need to see is dollar index breaking below the low of 104.8. I think once that happens, that's where we'll see that this three-wave pullback that we have seen, that is complete. And now this could probably end up being 1, 2, 1, 2, 3 going on. So let's see. We are at an interesting time right now. That is because the dollar index is exactly around its support level, and we need to see this week whether it bounces back or it ends up giving up the support level. So yes, if it closes below the moving averages, then whatever we are seeing in the commodities, that is a runaway rally. I think that should continue, and we should see good days ahead, especially for commodities. So equities also, there will be a bullish rub-off effect, but I think action is in commodities right now, and that may end up doing well.
Wonderful. That was very interesting, Jay. Thank you so much. Coming to the hot topic, that is the elections right now, which is causing quite a lot of drama. And we have been following up, on Indiacharts as well on it. So, Jay, what we saw is that a couple of weeks back, there was some nervousness amongst the market participants due to the elections, right? So do you see that risk of a negative surprise from the elections? And are you also worried about a significant decline? Also, please tell us, if not, what's giving you the confidence? Also, please enlighten us on the analysis on the chart structure and the sentiment data on strike, Jay.
Yeah. So I think, so wait, let me open the Nifty index. So I think it was when the decline was happening, especially this case. So there was this fear that, okay, what if BJP doesn't come, market will crash and so on. I think, I don't know. I hear many arguments that, BJP ko khali 350 milega or 300 milega or whatever it is. See, end of the day, if BJP gets a majority on its own, okay, which I think they have to cross some 280 seats. I think if that happens, that itself is a good indication that the government will be formed. So there will be those policy continuation and so on. So I think it is unlikely that they may not end up getting a majority. I think if they don't get the majority, that's where things will shake up, because that is something that the market is not expecting right now. Okay. So I think that is the outside risk. But I mean, if you ask anyone, the probability of that happening is very, very, very low. Okay.
Very low.
Now, if you ask me, if I am bothered about the correction or no, so the answer is no. The reason being that there are many of the data points, which I mean, in this zigzagging phase, I think there is a lot of bearishness that has built up, and people may say कि ठीक है market तो गिरा नहीं तो bearish क्यों लग रहा है, right? But if we see any of the sentiment indicator, it seems to be suggesting that, like, if I go and if I see many of the indicators, okay, like client positioning, they are extremely long right now, okay, and whenever they are long, usually the market bottoms. So you take it over here as well. At this low, the long was say somewhere around 292,000 contract. Okay, so when this low was formed, the clients were long. In fact, even when you go back a bit, sorry, yeah. So even if you go back a bit, even at this low, they were long. And basically the point is that whenever clients are extremely long, that's where you end up getting a meaningful bottom. Okay. Now, in this past few months, I mean, due to the zigzagging and all, we have got some extreme readings, but it was very recently that we got extremely long, extreme long positions from client. And from there on, we can see that the Nifty index has been inching higher. So this is one data point that is telling me that, if so the whole thing over here is that, the election outcome is normal and it happens the way the market is expecting. Okay. So I think if all things being equal and if I have to purely depend on the data, then you can see that major bottom occurs when clients are fully long. Okay. And this is the setup that we are having right now. In fact, when we look at the FII's data, okay, they have been extremely short. And typically when the FIIs are short, that's where a meaningful bottom also occurs.
Because
like we see over here. Now, again, the reading has come back over here and possibly we are forming a bottom as well. Okay. So now two things, client positioning and the FI's positioning. These two are sort of suggesting that we are at an extreme. And if we have to go by the historical data, then ideally we should be seeing a good up move in the days and the weeks to come. Okay.
Right.
When we look at many other data points, like if we see the put call ratio, so this is the open interest put call ratio. So over here as well, you can see, sorry. So over here as well, you can see that whenever they come towards the lower point, that is around that 0.72 reading, that's where we end up seeing a short-term bottom. So this indicator basically indicates a short-term bottom. Okay. Now the only time that you have to be a little bothered or concerned is that when it goes back to 1.05 or so. But right now the reading is 0.78. So in that sense, it has long way to go on the upside. But you can see over here that, when this put call ratio, it bounced back from lower levels, that's where bottom occurred. Over here as well, you can see the bottom occurred. Over here as well, we are seeing now bottom occurring. Over here as well, there was a bottom. Over here, there was a slightly different scenario where the market went lower, but this ratio was rising higher. So what does this ratio rising higher means? That more people are comfortable shorting put. And that's where this ratio starts rising. And that is typically bullish for the market. So eventually we ended up seeing a good move. So again, this is third data point that is sort of telling me that we were in this extremely oversold zone. And from there, we are bouncing back. Now, when we look at the AD ratio as well for, of the 20-day average, over here as well, we end up, seeing this ratio cooling off towards the first oversold zone. And from there, we are now seeing some bounce back. So again, this is I mean, one more indicator that seems to be suggesting that. And apart from that, the daily swing and the average swing, which people know that helps in catching the very, very, very short-term bottom over here as well. They were in oversold zone over here, and from that point, they have bounced back. So, I mean, if I see many of the sentiment indicators, they are good. The only one that keeps me a bit, I mean, this is actually bothering me a bit, is the future OI by index. Now, this, mind you, is a long-term indicator, okay? Which
Okay.
means that it is not that when the overbought reading comes, तो वो suddenly गिर जाएगा, okay? It may take time, but you would sort of know that we are reaching to some sort of extreme. Now I'll tell you why, okay? Because if we go by this future OI by index ratio, what it tells you is that future open interest relative to the index is actually at a very high level. That means that a lot of speculation is going on, okay? Typically what happens is that when there is a lot of speculation in the market, it eventually ends very badly, okay? Now the thing over here is eventually, okay? Now see, what happens is that once this indicator comes to extreme levels or historically high levels, see, this is where you have to be mindful of the fact, okay, that a larger correction can set in. Because normally what happens is that, if there is a lot of activity happening in futures, okay, that means that people are speculating it a lot, okay? And typically, we know that people, trade in the direction of the trend only. And I mean, people usually trade on the upside only. So what happens is that जब market गिरता है, then we have those cascading impacts के margin calls आता है and so on, and that's where ugly things can happen. So far, market is okay. I mean, it is doing well, and that's where what is happening is that despite this, I mean, this indicator, that is future OI by index, reaching an extreme, because just to put into context. In 2008, when this ratio had hit 1700 mark, that's where we ended up getting that 2008-9 ka decline. In fact, this ratio again got to those levels around 2018. So that's where you would know that the mid cap index peaked and we saw a good 30-40% kind of correction from the top. Okay, in this phase, actually, the Nifty index was rising higher and only eventually it fell. But yes, I mean, over here, broadly, the breadth started deteriorating. Now, this time, the good part is that, despite this ratio coming towards this overbought zone, or we can say that, at an extreme level, if we go by the historical data, we are still not seeing breadth weakening. Okay, in fact, there is a good participation that is going on. So, the moral of the story over here is that this indicator seems to be suggesting that we are at some kind of extreme level, but you need to understand that it can even take months, because this is a long-term indicator, okay, to play out. So that's where eventually what you have to focus is on whether we are getting a medium-term reversal on the Nifty index or not. Okay. And one of the simple fact which people who have been following us so far, they would know that, see, this is the first point of worry, okay? When the orange line, that is the 20-week average, if that is broken on the downside, okay, then that's where that will be my first bother point on the downside. But as long as that doesn't break, I would expect that there might be a slow grind on the upside or so on. But that's where I would think that the rally might keep continuing, and in this last 3 to 4 months, okay, what we have actually seen is a lot of rotation that is happening. I mean, if you see Bank Nifty, it is so far not participating, but at the same time, it is not breaking the 20-week average as well. Okay. Now the thing is that if I have to think कि अगर market गिरेगा तो कौन which will be sectors that can drag it down. So in fact, if you see the two heavyweights of the market, okay, that is Nifty Bank which I showed you over here, that also seems to be consolidating so far. And I think sooner or later it should break on the upside. And in fact, if you see Nifty IT, that has seen a significant correction from the top. Okay. And I think now in terms of retracement, if we see, previous rise ko almost 61.8% it has retraced, and it is now turning around. So in fact, there are so many laggards which are there, which can now actually end up participating, because all we have seen right now is rotation. In fact, when we see many other index, like, I spoke about the metals that seems to be rallying. Now, when we look at the monthly chart of this is BSC metal, okay?
Right.
So if I see over here, now you can see that this is basically 2008 high for metal, okay? Now that this entire trend line is breaking on the upside, and this has happened only in November 2023, okay? So again, this is like a very big breakout that we are witnessing. Even if we see power index, that is BSC power, over here as well, we are seeing this major high that is breaking on the upside. So, the point over here, what I'm trying to say is that there are many sectors that seems to be breaking out. So maybe we may not see action specifically on the index as such, but a lot of rotation can happen, within the index. And if you see auto index, that has been inching higher, I mean, without any major correction. If we see PSUs, this we have been bullish for so long, that has done extremely well, and there are no signs of reversal yet. If you see reality, it is doing well. So everywhere broadly, if we see, we are seeing these sort of patterns where the 20 week is holding and the index is, extending higher. So I think as long as, such patterns are existing, and these key indices are not breaking below the 20 week average, broadly the mood should be bullish. And I would again say that I know that there is a lot of concerns among people of elections and all, but if I have to purely go by the data and the way people are placed for that, I think there is honestly a lot of pessimism that I can see in the data. Okay, so think about it this way, कि अगर negative नहीं आया तो क्या होगा? Okay, because people actually position themselves for not so great outcome. I don't know why, but that is what the data seems to be suggesting. So now the other way I'm thinking is that even if we get a normal thing that BJP ko 350 380 seats aa gaya, I mean with NDA, so then I think there can be a big short covering rally that we can see, and this is where I think ये जो FIs का short positions which has reached almost this around 250,000 contracts now. So I think that eventually should get covered, and we might end up going to the other extreme, which so far we have not gone. And I think if that happens, then again I think broadly the market mood would end up being very bullish. So that's where I'm thinking that if all things being equal and we don't get a major shock from the election or so, then broadly things should be good and we should be headed higher in the days to come. I think exit polls will come on 1st or 2nd of June. That's where I think more or less we will be getting what might be the outcome, and market will sort of start factoring in that in the next 2 to 3 days. So I think by the time the results are out, most likely market would know what would happen, and that's where I am not anticipating any major big shock as such. But let's see. I mean, as we head towards the towards that 4th June mark, we'll get more clarity. Whether BJP is gonna come back or no, or with good majority or not. So those are things we'll figure out that time. But as of now, when we look at the data, everything looks okay. And in fact, I think we should see a good run before we end up seeing the result. So yes, that's how the setup is poised. And yeah.
That's very interesting, Jay. You did make the perspective quite a lot positive. and we are happy to hear your analysis. I'm sure next week is going to be even more interesting because we are coming closer to the results. So definitely anticipating the next week's midweek to be thundering. And we had a wonderful session. Thank you so much for the wonderful explanation. For those of you who haven't as yet subscribed to Strike, I'm going to leave a link down on the description. You get a 7 days free trial. So go right away on the link and subscribe to Strike. And also while you're at, do follow the Strike's YouTube channel. The link will be there as well. And the Twitter account. And also follow Indiacharts YouTube channel. Thank you so much, guys, for giving us your time. We really appreciate it. I'm going to see you next week with Jay. Take care. Thank you.